Welcome, everybody. My name is Matthew Mickleborough, and I host the Junior Resource Investing podcast and Substack. I'm excited to host another panel here today for 6. This one dedicated to exploring the Timmins mining camp and its future potential in the world as a mining and gold center of power. There are places around the world that when you hear their names, you automatically think mining. Names like Sudbury, Carlin, and Antofagasta. Timmins, Ontario would also be on that list. Found in the heart of the world-famous Abitibi Greenstone Belt, the Timmins mining camp to date has produced over 80 million ounces of gold since the famous Hollinger and Dome mines first opened over a century ago. And while modern mineral exploration has out of necessity pushed farther afield to find more discoveries, it would be a mistake for the industry to write off these legendary camps as exhausted of mineable ore. As the saying goes, the best place to find gold is to look where gold has already been found. And in terms of places to look for gold, there are few places better than Timmins, Ontario. Ample mining infrastructure, strong political and social support, and of course, rich geological potential are all part of the Timmins advantage. Joining me to discuss their company's efforts to discover and build the next mine in Timmins are Brian Skanderbeg, CEO of GFD Resources, Brock Colterjohn, CEO of Onyx Gold, and Jason Dankowski, VP Technical Services and Geology of Moneta Gold. Just a reminder here, everybody, that there will be time for questions at the end and that this is also being recorded. So, gentlemen, just to start us off here in a very simple fashion, why don't you just take a moment to give a classic elevator pitch for your companies, right? Why don't you highlight some successes of yours and what you think makes your story compelling? And let's go in order of answer here. We'll go Brian, Brock, and then Jason.
Yeah, thanks very much, Matthew, and welcome everybody. Today, I'm going to introduce GFD Resources. GFD is a Timmins-focused exploration company. We've been active in the belt for about 5 years, and we've got 800 square kilometers of ground, putting us next to only Newmont in terms of land position. So we're an earlier stage explorer. We have 3 main blocks of ground, Montclair, part of Gold Arm block, Penn and Doré, and that's both east of and west of Timmins. Mainly, we're focused on the Montclair system, which is an advanced exploration asset immediately to the east of Timmins. We'll spend about $3 million and drill about 10,000 meters there this year. So GFG's been around for about 8 years. We have some assets in the U.S. We're focused in Saskatoon, formerly management of Claude Resources. So we not only know how to explore for gold and find deposits, we've also have a team that's built and operated mines before. GFG would be about a 25 million market cap company. We're well financed, large shareholder base like both Alamos Gold and Lundin family, and really focused on driving exploration at Gold Arm through this year. So that's some of the key areas to focus for us.
Excellent, Brian. And Brock?
Hey, good afternoon, everyone, and good morning for the people on the West Coast. Thank you, Matt, for hosting this event, and everyone else for joining the panel. So Onyx Gold is definitely the youngest of the groups here, the companies. We're a new exploration company focused on well-established Canadian mining jurisdictions with assets in Timmins, Ontario, and Yukon territory. In the Yukon, we control a 210 square kilometer land package in one of Canada's most exciting new mining districts, where our direct neighbor has made one of the most significant discoveries in Canada in recent history. We are currently in the midst of a 2,500 meter drill program, testing never been drilled intrusion related gold systems, and results should be out in October. Really excited about the opportunity in there, and given the level of interest in the camp, we're excited to potentially unlock some real value there. In Timmins, we control a commanding land position totaling 335 square kilometers, including the Munro Creases property, which is host to Ontario's highest grade past producing gold mine, with significant opportunity to unlock new value there, and as well as a greater land package. We're well funded. We have 8.4 million in the treasury, a strong management team combined with an attractive valuation. I strongly believe we're poised for a significant re-rate on the back of any drilling success, either in Ontario, Yukon, or both. And I'll leave it there. Thank you.
Thank you, Brock. And Jason?
Thank you, everybody, and good afternoon. So we're Moneta Gold, the VP Technical Services and Geology at Moneta Gold. We are focused in East Timmins at our Tower Gold property, where we've got 12.8 million ounces of indicated and inferred gold. We're currently focused on advancing that through to PFS and then through to production past that. So we're currently just finishing our infill drill program, a total of about 150,000 meters to date. We are driving forward to the PFS. We just started our geotechnical drilling, our geometallurgical drilling, and driving it forward to production. Thanks.
Perfect. No, thank you guys. I think this will be an interesting panel. As three compelling companies at three different stages of a mine life here too. So I think maybe the core concept I want to talk about is greenfield versus brownfield exploration, and I guess maybe the different advantages or disadvantages or different perspectives or strategies you have to take to kind of navigate these different opportunities. Obviously, Timmins, Ontario, kind of the ultimate brownfield exploration rate when it's that old and that famous. I guess, gentlemen, Brock, Jason, Brian, in that order. Do you want to discuss, and feel free to be a little contrarian here if you like, or if you feel like maybe your answer's been if your answer has already been provided, maybe feel free to look at the other angle here from advantage or disadvantage, greenfield or brownfield. But Brock, Jason, and then Brian, do you want to just discuss that add some color to that conversation around greenfield versus brownfield?
Yeah, no, for sure. So with Onyx, we actually have kind of a portfolio of greenfield and brownfield projects. So particular, for example, in Yukon, we're exploring in a very greenfield area. So that comes with its challenges. So, stakeholders are unfamiliar with mining. You need the critical mass to offset the infrastructural challenges. So you have to have something that's large or high grade to offset that initial capex and the overall opex of the remote type of situation. So Timmins offers a lot of opportunities where it has that brownfield setup. So existing milling capacity, but in particular, it's excess milling capacity that with some of these mature camps we see. So that really lowers the resource threshold that we need to discover in something like Timmins. But on the flip side too is the Timmins camp in particular has been highly fragmented. So despite being a mature camp producing over 100 million ounces, there's a real kind of Great Bear, Red Lake type of situation that I think that could be found in Timmins, given that fragmented ownership. So there's a really opportunity to find a greenfield discovery kind of in the shadow of a headframe, as they say. So basically the advantage is, to reiterate, of a greenfield is, it's a fully intact resource, hasn't been depleted, high graded or sterilized from previous mining methods or different commodity prices. Greenfield projects tend to have greater economic contributions thanks to the initial capex of building, employing more people, basically essentially starting from scratch. But the disadvantages to a greenfield is permitting, critical mass issue, access to infrastructure, local stakeholders potentially unfamiliar with mining or mining permitting, and then the brownfields, like I said, is typically mature camps that have milling excess capacity. That obviously lowers the threshold of discovery that we need to find. So but a disadvantage of brownfield is the resources tend to be on average smaller and generally lower grade, because previous commodity prices were much lower, so they have to focus on grade. So if you're finding ounces peripheral or adjacent to existing kind of previously mined resources, they tend to be the lower grade halos. But also the properties on brownfield projects tend to be smaller due to that historic legacy mining camp where there's a lot of previous owners that takes a lot of time to basically consolidate. And the last point before I hand it off to my colleagues, potential liabilities that come with brownfield projects, right? So from the legacy of previously mining, and that could have obviously upfront challenges on your balance sheet for a small junior company to handle those environmental liabilities too.
Excellent. No, thank you, Brock. And Jason, I'll move on to you.
Thanks. Brock made a good point there, just around legacy issues around brownfields. I mean, that's an important one in and around, particularly, these historical mines that we're trying to find more gold. How was it left? What condition was it left in? But I think that here in East Timmins, we're kind of in a unique position where you get the exposure of both the brownfields and brownfields. So you've got the major open pit mines sitting in Timmins, about 120 kilometers to the west, and then in the East Timmins region, you've got open underground mills. So you've got the McEwen, and you've got Holt Holloway, the historical Holt Holloway. What there isn't is open pit mill that's right in this particular region. So to me, we're kind of right in the cusp of being a brownfields and a greenfields. Particularly in and around, when you think about discovery potential as well. So the one is the infrastructure in the region and the opportunity to add to that infrastructure, and then two is the technical opportunity for discovery. So when you think about greenfields, it's prime ground, right? So that has a recipe for discovery. It's exciting. It holds a lot of value. If you can take what the emplacement models of the rest of the camp and apply them here, or think differently, but there's also high risk, so the disadvantage of the greenfields, much to what Brock was just saying, is limited exposure, high cost of financing because it's very early stage, and then on the brownfield side, because those typical emplacement models have already been sort of driven home in a lot of these deposits, you have to think differently. But that comes with new success. If you can take what's being defined as a new emplacement model and apply it to this deposit that's been mined or partially mined, if you can think differently, you can drive significant rewards with tremendous benefits in and around infrastructure. You can also leverage those relationships of previous miners. That can be an advantage or a disadvantage. Successfully acceptable practices have already been established in the camp. It typically makes things simpler to navigate. Thanks.
No, thank you, Jason. And sorry, Brian, just a quick follow-up for Jason, if you don't mind. I mean, Moneta, 12 million ounces to your name, decent grade. This is not a marginal grade projects, right? You're not kind of picking through the scrap heap. I'm just wondering, do you mind discussing? I mean, how did Moneta come about to acquire a 12 million ounce resource here? I mean, what was the process? What was the historical exploration? Was this a matter of? I mean, Brock, I think interestingly brings up this nature of the fragmented camp of Timmins. Is this a matter of marrying multiple different land parcels together, or land claims together? How did you come about to get 12 million ounces, which is obviously a pretty nice number?
Yeah, so it's a combination of greenfields and brownfields. Again, you look at our original deposit, so at Golden Highway, back when Barrick owned it, they sort of touched on the edges of this emplacement model that we're applying at our Golden Highway deposits. Subsequent exploration, didn't have tremendous success, but then when our previous CEO, Gary O'Connor, came in, he thought differently, right? So, thinking of it as an extensional system along a splay of the Dester Porcupine, and he quickly added tremendous amount of ounces, going up to, I think it was around 8 million ounces. And then from there, we also looked at acquisition, so M&A. And so we merged, the entity from 03, which was the Garrison project, which carried about 5 million ounces. And we merged that into the Golden Highway deposit, which then became our Tower Gold. So it's kind of a combination of both discovery and M&A.
Thank you, Jason. Brian, final thoughts to you on this one?
Yeah, I'd agree with much of what Brock and Jason have indicated on this trade-off between brownfield and greenfield, and I kind of synthesize this and think it's about path to the prize and probability. So we think about A, what's the probability of finding an economic deposit, and B, what's the time it takes after you found it to make anything of relevant from it. So when I think about Timmins and the brownfield opportunity that we all obviously host in this area, I just think it's a probability game where if you find 1 million ounces here at 1.5 grams, the likelihood it's going to be attractive and valuable to somebody. If you find that in at the end of the road in central Nunavut, it's a very limited value, and ultimately that's really what drives shareholder value, is finding something that's economic. So when we think about this time value of money, and a company I was involved with historically with Gold Resources made a nice discovery proximal to infrastructure that saw the mill in about 6 years from first drill hole, and that was an extremely short time frame, but that's allowed in brownfield. And that's ultimately how you can, I think, create immense value in working in these brownfield environments, is the time and the probability of the prize. The other way to think about this, I think it's quite valid, is the cost of capital side. So all of us are out here competing for capital, and ultimately, I think we're a good example where a company like GFG has got Alamos as a shareholder, has the Lundin family as shareholders, and I think you'll find investors much more willing to back you in a brownfield environment because of this better probability, shorter time frame. So cost of capital, I think, is a direct relationship with stage of the exploration asset as well, and the need to have a portfolio. Brock touched base on this portfolio effect. I think that's very, very valid. Anybody that's doing greenfield exploration, I believe, needs a modest portfolio of properties to help mitigate that inherent risk at the greenfield stage of it. So those are some of the concepts that I think we weigh at GFG is the trade-offs between brownfield and greenfield.
Thank you, Brian. And Brian, I might just come back to you with this one because I think that maybe it's relevant to your story here. I think you all of you gentlemen have done well espousing the nuances, the differences in terms of potential and outcome and reward. And I mean, it all comes down to risk versus reward, right? And balancing that ratio and finding those asymmetrical opportunities. For those reasons, brownfield is obviously excellent, right? But Brian, I guess maybe how the risk of brownfield exploration is that you kind of get stuck picking through other people's scraps, right? And so I guess my question for you is, what's that sense when you're exploring, when you pick up a brownfield land claim and you're bringing fresh eyes to it? When does it start to emerge when your time and your money is finding value, or maybe it's a bit of a dead end? How do you make that call? How do you make the judgment call, and what goes into that?
Yeah, look, I mean, we have a portfolio within GFG, and what we want to see at these assets is we'll have an initial thesis when we maybe put the land position together, like Montclair at Gold Arm, and we may have ran an internal conceptual model and targeting model and with a thesis to say this could be a 1 million ounce deposit. So we want to see proving that thesis as we stage our exploration into it. If we step out 100 meters or 200 meters, we want to see the system continue to return to our expectations. So that's where we're really measuring the investment of our continued investment of our exploration dollars in a given property is ultimately our concept and the validity of the concept remain the same and remain as prospective as we might have hoped. And whether you pivot at an asset scale or even a property level, so we all have a target pipeline within each of our land positions, and there might be a dozen targets. So to me, it's also balancing a portfolio within a given property where certain targets will be drill ready, and it's really important for our exploration team to build that pipeline of earlier stage targets, get them, do the groundwork, build it up, get them to a drill ready test, because ultimately probability tells us we're going to fail at a drill testing new target greenfield stage. So we need a properly filled, robust pipeline across a given property, and even at a larger scale across a portfolio. And to me, that's the adequate and the best way to mitigate some of this greenfield risk and even brownfield risk, when you might step into a property and say, you know what, it's not delivering. We're not hitting economic intercepts. We're not showing the continuity that will translate through to our resource. Those are the questions we need to ask ourselves if we're continuing to invest, or is there some fatal flaw we're outlining at this stage that would make this brownfield opportunity something that's not going on the path that we would want it to see.
No, well said. Brock or Jason, any additional color to add to that?
Yeah, no, I think Brian said it well. Having that robust pipeline of brownfield, knowing zones of mineralization to follow up on and explore, but also have that robust pipeline of greenfield targets that you can keep chewing through. And because like Brian mentioned, that the probability of making a huge success on your first brownfield target is pretty low. So having that robust pipeline that you can keep shifting through and ultimately make a new discovery is very key. And fortunately at Onyx, we do have that big commanding land position in Timmins where we have that brownfield targets, but also some of these greenfield opportunities. And drilling by our predecessor company, High Gold at Monroe Croesus, for example, in the past 2 years specifically, have made several new discoveries on this brownfield property, while also proving that some of these key gold-bearing vein structures that extend outside of that very high-grade historic Croesus mine also exist. So in particular, that Argus zone at Munro Croesus we discovered last year, it's a new bulk tonnage discovery hosted by the Pipestone Fault, located in close proximity to that historic Croesus mine, but also only a couple kilometers away from Mayfair's Ben Gibb deposit, which is also hosted by the same structural system. So, for us, that just shows that there is a lot, despite being a brownfield, quote unquote, land package with a legacy mine on it. There's a lot of new targets we can discover as well. And case in point with this Argus, which is also, like I said, hosted by the same fault, but the Fen Gibb, which is over 3 million ounces, is only about 2 kilometers away. So, and that goes back to the fragmented ownership, specifically with Croesus, where it's just a huge component of patented claims that we've taken about almost 20 deals in the last 3 years to triple that land package. And a lot of those claims haven't been explored in several decades and were owned by families who some didn't even realize that they own those patent claims. So that presents that's a barrier, but also presents an opportunity for the company who's willing to consolidate these land packages. And case in point, we can find new zones of discovery that this year we plan to follow up on with our fall and winter drill program, but also really focus on finding additional high grade. So and then given where that, especially with Munro Croesus, given its proximity, sandwiched between McEwen Mining's Black Fox complex and Mayfair Van Gibbs deposit, we don't have to find a substantial amount of mineralization to be very relevant to a potential hub and spoke, type of scenario. So having that, pipeline is very, very special and important.
Thanks, Brock. Any thoughts from you, Jason?
Yeah, I agree completely with Brian and Brock. I mean, pipeline is extremely important. Another thing that Brian said that I'll just double down on is agility. Having the agility to, drive an investment, to test a model. Testing, this is what we're in the business of, is testing various emplacement models, various mineralization controls to see if you can expand, in the brownfields environment and in the greenfields environment, is testing various models. So, if there's success, absolutely continue. If there isn't, you need to be agile and pivot and attack the next one. We at Minetta, we've got 8 kilometers of pipestone ourselves, another 8 kilometers on the Dester. From a greenfields perspective, this is sort of, the methodology that we're using. And then on top of that, even within the current open pits that we're currently defining into indicated as we advance to our PFS, this is, identifying new mineralization within each of those pits to expand them or to bring in more mineralization within them. So it's agility and a pipeline is absolutely critical.
Excellent. And so next question here, I guess, we've touched on this a little bit. I think you guys are doing an excellent job of Brock, you talk about collecting and consolidating land packages, and Jason, you mentioned, testing various models. And I think that's starting to kind of get it. These are revolving around this concept of how do you extract value and knowledge and understanding in the difference between green and brown fields, right? And I think, Brock, you said, even in the Timmins camp, how brown is brown, how green is green when it's that well known. I guess maybe this might be just an opportunity for you gentlemen, to pick a couple of your land packages or projects and then just discuss how green or brown they really are. Maybe we'll just start there, right? Just, how much are you building your company value around a truly underexplored or unexplored project, and how much are you building your company value on the known knowns, if that makes sense, of a brownfield project, and what does this mean for your own exploration and unlocking further value for shareholders? Jason, Brock, Brian, we'll go that direction.
Yeah, so we'll focus on our Tower Gold. So I think we've got a component of both green and brown, and I wouldn't even quite call it brownfields. We're in an established camp of Timmins, but at the same time, East Timmins has a lot of opportunity. It's got, 2 underground mines, but from an open pit perspective, it's completely green. and so that's the sort of value proposition that we're sort of focused on is how do we get to a point where we can build the first open pit mill of the region, which greatly will expand the opportunity of East Timmins, particularly for underground from, either toll milling or, acquisition M&A type perspective. But, when we look at Tower Gold specifically, we do have historical production in terms of John Paul underground, and we also have, the test pits of Garcon. So, that's the limit of our mining on our property. But at the same time, at Golden Highway, it's completely untouched. And then we've got, as I was saying, 8 kilometers of pipestone and 8 kilometers of the Dester Porcupine that we haven't actually done any exploration on in, say, the last 10 years. Just little bits and pieces. So what does that mean for us? What are we doing differently? I'm going to say that we're sort of focused on driving that open pit value at the moment. How do we become the partner of choice for all of the peers in the camp by building that open pit mill first? Is sort of how I would view it.
Excellent. Brian, any additional thoughts on that one?
Yeah, I look for GFG. There's this dichotomy as well, and if you look at the Gold Arm property for us, it has a core block called Montclair, and that's about 1 kilometer that has a significant amount of legacy drilling on, like about 100 holes. So that area, I would say, we know there's a good system there. We're following up on that, and it's undercover, so we feel we can grow it both at depth and along strike. But when we stand out and look at the larger scale position, it's ultimately why we put it together. We have about 30 kilometers of strike length. So outside the main deposit, it is green in the sense that we can go 4 or 5 kilometers and not find a single drill hole along a major prospective corridor. And so I think the consolidation strategy that we've taken was always with the mindset that here's a good system and here's a thesis. We feel this block is underexplored. We feel the model can be applied across it. It's all undercover. It's under till. So it's got this concept of preserved endowment. And so what we wanted to do was establish this portfolio effect within a given property where you have a nice anchor and you have the scale to be able to grow it. And I think when you take that strategy, you're able to find capital at a better level. There's more companies looking for that type of an asset. And you're also pairing this brownfield greenfield discovery potential within a given property, which I think is very attractive. So that's kind of how I rationalize our project and think about it from the stage of what's greenfield, what's brownfield. And I think Jason's point about what's going on in the Eastern Timmins camp is ultimately you have to look big picture and say, look, there's 15 or 20 million ounces out here. And ultimately it's why, I think this panel is really attractive to bring light and concepts and ideas to this area where you can't look at many areas in Canada and say, look, there's 15 or 20 million ounces there, and there's infrastructure, there's people, there's power, there's capital, and all these things are present in the East Timmins camp. So GFG has an attractive size block. Veneta has a great looking resource that can certainly grow. The Onyx guys spun out of High Gold have a really critical block too, and I just think that this trifecta of companies is all really focused in a super attractive area that I think has a lot of infrastructure to go in the future.
Brock, any final thoughts on this one?
Yeah, absolutely. And I think just on that point on Eastern Timmins, I really feel like that part of the Timmins camp particularly is very much, the next generation of production is going to come out of. And all three of us have very strategic land positions and a big role to play within that kind of next, generation Timmins that we see it evolve in the coming years. So, our exploration philosophy and approach, despite being a new company, we've been actually around the camp for many years with our predecessor companies. We were spun out of High Gold and then Constantine Metals before that. And so some of our teams have been there guys have been there for decades. And their view has always been, let's look at proven mine camps like Timmins, and then let's focus on the underexplored areas with solid geological fundamentals. And then so from there, we consolidate land positions with the best geological merit, and then take that systematic big picture approach to exploration on that consolidated land position. So an example of that, like I mentioned, is Munro Croesus, where we more than tripled the land package in 20 separate deals. In the core of that is that Croesus mine, which produced almost 15,000 ounces at an average grade of 95 grams per ton. There is quite a bit of drilling in that area, but you step out a few hundred meters away into a pattern claim, and there hasn't been any work done in several decades. And so there's really presents an opportunity to unlock further, high grade mineralization in kind of what's thought to be a bulk tonnage type of camp. It would be exciting, but also with our Argus discovery and several other targets, there's opportunity to further build critical mass in this, kind of underexplored, appreciated part of the Timmins camp that I think is the, shining light of the future for this really mature mining camp. And then just going further afield to our other land positions, Golden Mile and Timmins South, they're in Timmins kind of proper. They're more kind of that pure greenfield type of play, earlier stage. And, there's an opportunity to find a Great Bear type of situation where, you can find gold where a traditional geological sense in a mature camp shouldn't exist. And sure enough, Great Bear and Red Lake, they kind of rewrote the geological handbook on that mature mining camp. So I think that presents an opportunity for us on our earlier stage properties, particularly Golden Mile, where looks like there's an evolving understanding of a structure going onto that property. And there's overburden in a shallow lake. It's tougher work, but at the same time you see something like a Val-d'Or, which is a more mature camp, more players. And in the West, there's always been more gold production. That's because most of those mines were discovered via outcrops that were basically sticking out, versus the East. It's been much tougher, but companies like Probe and O3 have certainly shown that there's gold. The structures continue under the overburden, so it's a tougher type of exploration. But there's certainly a lot of ounces to be discovered in this camp. So I think between the three companies here, we have a lot to bring to the table and kind of unlock the future of this camp for several years to come.
I like what you say, finding gold where it shouldn't exist. I thought that was an interesting takeaway from that. And I think that's kind of pointing towards our final question. But before I get there regarding M&A, and you talk about fragmented camp, all three of you have, I think, I just maybe, for the sake of knowledge for listeners and for the sake of people who aren't in the industry, I mean, my question here I'll have for each of you, and it'll be slightly different, trying to highlight the different stages you're at. But what are some advantages to working in the Timmins camp, or the East Timmins camp, that maybe aren't obvious, or that the average investor might not think about or realize? Maybe those the hidden gems, I suppose, as it were. And maybe Jason, I'll start with you at Moneta. When you're a developer, 12 million ounces, you're further ahead than these other two gentlemen's companies. Is there something that comes to mind for you from that perspective?
Yeah, I think honestly, it's people. At the end of the day, it always comes down to people. So, working on our project, we have some great geologists. So, people who have worked in the camp for 5, 10, 15 years. They've seen the different mineralization styles at each of the different mines or projects around the region, and yet remain true geologists, right? So that is something that's sort of lacking in the industry, for instance, is those true geologists that really come down and think, mineralization controls and placement models, rather than, going straight to modeling. So, our sort of process at Moneta is all about understanding that emplacement, looking at the lithology, alteration, structure, and veining. How does that relate to those mineralization controls? And then from that, starting from what start to build those models and step outwards. And Timmins has great people that are keen. It attracts the type of geologists, the type of people that are keen and want to do that sort of work, rather than jumping straight into modeling, for instance, and trying to figure it out through that methodology. So I think, and that drives that explorationist point of view. It works both within our current as a developer and as a greenfield project, right? So It allows you to test some emplacement models on the areas that you're not currently focused on, or you have one drill on, but then also in the pits that you're driving to indicated, finding more. So these type of geologists flourish in Timmins, and then on top of that, you've got mill people, you've got project people. It's just all of the people that you need to advance the project forward is sitting right in the Timmins region, and love to think differently and push things forward. So,
awesome, Brock. Maybe I'll go to you next. So, I mean, Onyx. I mean, you have like you say, a very large land package that you've taken the time over the past few years to develop. Maybe I'll ask you, and feel free to take this in your own route if you have something else in mind. But I thought I was going to ask you about just land acquisition and the ability to pursue these sort of deals in a fashion that, I mean, is that part of the Timmins advantage, that you can actually go out 20 separate deals in the last 3 years? Is that smoother or an easier process because of where you are? Or how does that factor in?
It's tough work. One little postage stamp patent claim could take you as long and as hard of a work to consolidate something that's 100 square kilometers, right? So it's a lot of tough sledding, but it ultimately, the reason why we do it is because it's consolidating a very prospective area of the Timmins camp, and so it's worth it. And given our land position to start with, we were more or less the natural consolidator in a lot of this stuff. And so we've built up a good rapport with local owners, but also our local kind of incumbent gold producers as well. We have a senior gold producer who's has a strong presence within the camp. We have a great relationship with them, and we're doing subsequent deals. It allows us, with our relationship, to unlock and acquire some properties that I would say others would find have a much more challenging time to do that. So I think that gives us a little bit of a competitive advantage on that sense of things. And so, and that's the thesis for Monroe. Like I said, it's just been the fragmented ownership, right? It's over half of the land package is patented claims. So for example, one of them was owned by in a bank trust, and the gentleman who owned it was an owner of a gun shop in Tennessee. We've managed to finally track him down, and he had no idea that he even had title to a patent claim in a very important part of our land package, right? So it just goes to show, like, the opportunities, but also the challenges, right, of consolidating a fragmented area. And then the other angle, like I mentioned, is that paradigm shift of thinking. It's a mature camp with geologists that have this very traditional sense, who have been there for decades. It's, we have to be tight to the structural break in order, that's where all the gold is. But, like I said, Red Lake, Great Bear is kind of rewritten that understanding in Red Lake. There's a lot of guys in the Nevada and Carlin that have really kind of wrote in some of the geological understanding there, where older previous geologists would say that there's no such thing as a formation going there, et cetera. So with this Golden Mile Timmins South area, there's a really opportunity to find gold in these underexplored areas, because it's, like I said, there's overburden, which creates a challenge, but there's a new paradigm shift in geological thinking of where gold can exist with it off the breaks as well. So that presents an opportunity for us to potentially unlock. And Golden Mile in particular, it's a 15 kilometers by 10 kilometer long and wide property that has seen 15 holes completed in the last several decades, and it's right on trend of Bell Creek, Hoyle Pond, McIntyre. There's clear kind of northeast trend off the break that is kind of hinting at something. It remains to be seen, but there's a lot of thought that hopefully we can unlock some value there and kind of prove these new geological theories, basically, that we're really excited to do. And then just building on Jason's points, people's key in the Timmins camp. But as we mentioned earlier, as being explorers, our cost of capital tends to be a lot higher. So Timmins offers great people, but very competitive drilling. After access is very good. So Monroe, all our properties are drive accessible right off the highways. So our cost of capital, the cost per meter, is significantly less than would it be, let's say, in Yukon, where we can spend as much in Yukon for 2,500 meters versus 6,000-7,000 meters in Timmins. So our productivity, we can stretch it. So when our cost of capital is quite high for our stage of company, it's nice to be in these camps that, really offer that competitive pricing where we can really, get the best bang for a buck and create as much value for every dollar that our shareholders provide. So we're really grateful for our strong shareholders and allowing us to unlock some value here. And so we'll stay tuned. Really looking forward to it.
Thanks, Brock. And sorry, Brian, just a quick follow-up to you, Brock. You mentioned, 15 holes over several decades. And I guess my question to you is rather simple, and maybe it's got a simple answer, maybe not. But, how the heck does that happen, right? I mean, you have one of the most premium jurisdictions in the world, one of the most premium camps in the world. And then you have, Onyx's working thesis is that you are going to find value that others have overlooked. How does that come about that you have 15 holes over several decades? How does that underdevelopment happen or occur?
I think it obviously historically there's been more lower hanging fruit in the sense of don't have to drill through several tens of meters of overburden. Blind discoveries are challenging. So I'm not going to say this is going to be easy, but we have some really interesting targets that we plan to drill this winter. And so stay tuned for that. But and then the biggest thing was what I mentioned earlier is this big company thinking of we've been there for many decades. This is where the gold mineralization is. So they really stick to their knittings of what they believe where gold is. And I, like I said, the Great Bear analogy in Red Lake is very strong. Where they found gold mineralization in an unconformity in the and in a stratigraphy that wasn't supposed to be hosting gold. And a big company had the opportunity to consolidate that land package for several years, and they never did, even though it's in the shadow of the head frame type of thing. So that's the opportunity. Is I think as much as our space is very progressive, we're also very traditional thinkers as well, and I think it presents an opportunity for next generation guys to come in and kind of rethink how to apply new geological understandings as time evolves, and I try to shoot for the moon and see if we can unlock some value in some very prospective but underexplored land packages.
Thanks, Brock. And Brian, I think that's actually a decent jumping off point for you. My question, and now you absolutely reserve the right, if you wish, to discuss, less than obvious advantages of working in Timmins. But for me, if I was going to, speak for you, I would say that the advantage for you is all that historical data. You mentioned having 100 holes, and so you have a strong suite of knowledge to work from that informs your own exploration as a company. But then you're also kind of trying to prove those previous explorers wrong too, right? That you are bringing a modern understanding or a more nuanced understanding of the land packages, land claims that you have. I guess my question for you is that, historical data, how much does that inform your working thesis now? Is your working thesis, how does it develop or inform or how does it build off of what came before, I suppose?
Yeah, good thought, Matt. To us, it's making the most of that data. And as you mentioned, there's about 100 holes, 120 at Gold Arm. And to me, I go back to the acquisition of the property, and it told us there was a system of relevant scale there. And then we could understand the history to see the preserved opportunity. So that really drives efficiency. And I talked before about time value of money, and when you think about exploration in the window to take a discovery through to something of economic and hopefully through production in time, if we can be most efficient at our exploration, that's giving us a better probability to be successful. So when I think about the usefulness of the legacy data for us, we have ground mag data, we have aero mag data, we have IP data. We have 120 drill holes that were completed historically, and ultimately that is data that we don't have to go and collect, and we can collate it, interpret it, model it, and use it to make more efficient decisions in terms of our capital allocation. So we think about this impact to GFG, it truly is time and efficiency of exploration. And if we start with something that we have a model we're going out there to test, and we're not taking the risk of saying we need to find a true greenfield discovery, well, that materially changes our probability and our time. to take this forward. And so I think about the case of GFG, there's a really good balance. We've used that legacy data. We've truncated our exploration time frame as much as we can by using that historical data. The other side effect that I think, in addition to what Brock and Jason have talked about here in terms of the Timmins camp, is this concept of access to capital. And if the brownfield greenfield trade-off exists, we feel, and I think we're a good example to say, finding another $5 million, an incremental $3, $5, $6 million, $10 million is much simpler if you can take it to a company and say, we have this system, we've lowered our probability or improved our probability, and we've shortened our time frame. You're more likely to find more capital and better, more attractively priced capital. So this concept of availability of capital when you're working in a camp like Timmins is a huge consideration. Groups like, you can take an Alamos, which is one of our largest shareholders. They are leveraged, the Abitibi. They control infrastructure here. They're leveraged to success, and they want to put whatever you find, or hopefully, that through their infrastructure. Otherwise, they wouldn't be shareholders. And they believe in this camp, and they believe in the people. So the concept of access to capital, I think, is a huge advantage of a brownfield environment like Timmins. And whether it's a Newmont or a Pan American, or a group that doesn't even have presence, a mid-tier gold company that's like, we have lots of political risk elsewhere. We want presence in the Abitibi. You can take a major, you can take a Barrick, for example, and say, why are we talking about having more presence in Canada? We're talking about that because of the preserved endowment and the size of the prize. And that all influences our, the junior environment's ability to access capital. So I think that's a really key thing in addition to what my peers have talked about for the advantages of brownfield.
Thank you, Brian. I might just ad-lib off that. Brock or Jason, do you guys want to just discuss, access to capital? I think that's a very cogent point to make. Do you have even just horror stories that we can share on the campfire here around, stories that about greenfield projects that just withered on the vine because they couldn't find access to capital? Or, is anything you want to discuss on that note that Brian brings up?
Go, Jason?
Yeah, there's all kinds of horror stories on the greenfields side of things that, access to capital has sunk a company. Whether it's lack of discovery or overspending or whatever it might be. But, at the end of the day, I think that if you can drive a company culture, that's focused on, like I was saying, with people, and then, you combine that, those, that local workforce that understands the camp with a company culture of innovation, very much like Brock was saying, that combination is going to get you that initial success. And if you can get that through the drill bit, capital will come.
Yeah, and so we're a brand new company. We just started trading, 2 months ago, basically, and so we raised $8.36 million in a tough tape, and that's largely because of two things: what's going on in Yukon. We're the closest neighbor. We're the only other gold company in that direct camp that is drilling intrusion-related gold systems that are the same age. Check all the boxes. In terms of all the signatures you would want to see. So, and we're drilling as we speak. So I think that, help bring in the capital, given how advanced our projects were, and the timing, and given the re-rate our neighbor has done in the last 18 months is pretty amazing. So a lot of guys feel like they missed the boat there, and we provide the next, the early stage opportunity to get in at an early stage, and, right at that pre-discovery stage. So we're hopefully, with our drill success this year, like I said, results come out this fall. We could be poised for a significant re-rate and reward our shareholders. But at the same time, a lot of capital did come in too for our land package in Timmins, and we've High Gold, our predecessor company, has done a lot of great work in that area, and a lot of investors are excited with what they see there and the opportunities. So it's when I go market it around recently, last few months, like I'm actually surprised how it's almost 50-50 in terms of people's interest and and their interest where that incremental dollar goes is between Timmins and Yukon. It's quite interesting. So it's great that we have both shareholders and capital going into the company for unlocking what we see in Yukon, which is, like I said, the most exciting area of Canada right now. But in addition to Timmins, which is always the best gold camp in Canada, and and what we see there and how we can unlock value there as well.
Thank you, Brock. So we're nearing the end here, rounding the corner here for the last stretch. So I've had a couple of questions from the audience, but I'll invite people to get the questions in. One more question from me before we get to audience questions, though, and it's just regarding, and this is something that the gentleman here, the CEO, has brought up prior to our going live, is wanting to discuss there's substantial, obviously significant amounts of infrastructure in the Timmins mining camp, and I think all of you kind of referenced this too, right? I mean, even discussing the fragmented nature of the camp, right? And Brock discusses not being done for several decades. So I guess, what is the nature? Your opinions moving forward. Is M&A inevitable? Is it necessary? How much does that impact your own strategies moving forward as companies? And I guess Brian, will go to you, and then Jason and Brock.
Look, I mean, Timmins is a sought-after camp and piece of infrastructure, and there's two main producers right now that control big chunks of it. Obviously, Newmont and Pan American from a production point. Secondary would certainly be Agnico Eagle and McEwen. And when we think about these companies' commitment to the camp, I think you can see the camp evolving in time. And this piece of who controls camp infrastructure is very relevant to those of us exploring here from a relationship perspective, from an access capital perspective, and how they view this camp. So if we have some majors or mid-tiers that are controlling the infrastructure and don't view the camp as core, you're going to see and find it more difficult to raise capital. If you look at camps that have been controlled and maybe reinvigorated by transactions, you find a stronger investment thesis. You find a history. You may find new discoveries coming to light. You bring more eyes to the camp. So I'm quite optimistic that Timmins has been here for since the 30s, and as we know, there's about 100 million ounces of gold here, and lots more to be found. And as we look at this camp evolution, I think I'm pretty certain there's going to be changes in the owners of some of the key infrastructure. And I think that has the potential to reinvigorate this camp. And those of us that have consolidated big blocks, that have controlling pieces, I think stand to benefit from that consolidation or that step change in ownership and strategy for the belt. So I'm really optimistic to see how the camp unfolds over the next 1, 2, 3, 4, 5 years. And I think there's some potential for this to reinvigorate the investment in the camp, not just in existing, but even in pieces of new infrastructure. Things like might make view Moneta in a very different light when you have 10 million ounces, and all of a sudden there's a new person in the camp that's looking to grow production. So I think that's a valid thought for all of us.
Perhaps it's obvious, but nevertheless, I always find it interesting how much above ground machinations or bureaucracy or whatever can impact below ground exploration too, right? And that below ground success relies so much on that above ground sort of stuff. Jason, on to you.
Yeah, I mean, the camp is sort of prime for consolidation. You look at what's sort of happening in East Timmins. You've got underground size mills. You've got, you look at Moneta and we see a resource where we can define an open pit scale deposit. And to me, that's going to be a game changer that we hope will be the catalyst going forward for the camp. When that open pit mill gets developed, it's going to open the door to all kinds of new ways of thinking. Those underground, the underground deposits don't necessarily need their own mill. When you've got an open pit mill with, that could potentially take higher grade, right in the core of the East Timmins area. The nearest open pit mill is 110 kilometers away in Timmins. So that limits the availability for haulage. To me, this is sort of the central point of a new opportunity that's going to drive catalysts going forward, and I think Minetta is well set up to take advantage of that, to lead that, and I think everybody's going to get the benefits out of driving this forward, this entire camp. And if the mid tiers or the large scale producers come in and take notice of that, I think that's only a matter of time, and it's quite exciting for us and our shareholders.
And Brock, on to you.
Yeah, I think Brian hit the nail on the head there on the side, on the whole macro future of the camp. I think there's some big players who will change hands here, and whoever looks to buy these material positions in the camp will take the view of consolidating. And ahead of that, our goal is to create value for our shareholders through consolidating, increasing our land position, making discoveries, building ounces. So when that that change of hands occurs, and that new company looks to breathe new life in the mature camp, and we've seen several companies do that over the years with Evolution and Red Lake, and even Karora in Australia, these mature mining camps with younger new companies want to invigorate these mature camps. Onyx wants to be a material player, and that has a significant land position and a material player at the table here, that we can provide that organic growth for that whoever comes to look to provide that kind of the view to add more spokes to the hub or whatever, and so we that relevant player, and also to Jason's point too of this paradigm shift of high grade underground transition to open pit bulk tonnage mining is we've seen it in Val-d'Or with the Malartic mine, and up in Detour as well, which was an underground mine turned into, now those are the two biggest gold mines in Canada, and we'll see that in Timmins as well. And so for Onyx, finding additional bulk tonnage mineralization in close proximities to these existing developed these mature development stage open pit bulk tonnage projects, we could be synergistic and ultimately create value for our shareholders by expanding those, and again being seeing that clear synergies for a potential roll up as well.
Excellent, gentlemen. We have 5 minutes on the clock here. If those have exhausted the questions from me, thank you for your answers. We do have a few, some questions from the audience here. Jason, I'll head back to you. This one's from a couple from Jacques. First of all, just simple question is, how far away is the building of a mill?
Yeah, so right now our target to production is 2029. So we're looking at an investment decision of in and around 2027. So that's 4 to 7 years away.
Okay, and then here's this is a matzo ball right down the pipe for you here. How economic are Minetta's projects looking at this point?
Yeah, it's a great question. I mean, you look at our recent PEA that we finished about a year ago. 1.1 billion in NPV, IRR, I think of around 32%. That's at $1,600 gold. So, it is looking economic. That's a combined open pit and underground. The open pit is making up about 700 to 800 million of that NPV. Internally, we're strategizing all the time, trying to drive the grade up, a higher grade. If we can push that grade up for the open pits over 1 gram, with a strip of 5 or under, that's sort of the internal strategy that we're trying to push forward, to drive that sort of value proposition that we are an open pit deposit with an underground upside. So you got a de-risked standalone open pit mill, and then you've got a significant upside with the underground. I think that's a significant value proposition for our shareholders, for the camp. And it's something that we're excited to try and drive internally, and as we advance to PFS, bring that forward.
Thank you, Jason. And not just trying to be efficient here, but Brian, I'll pass this one off to you from PT Harris. What have you seen change in recent years in your understandings of the region's gold endowment?
Yeah, I think if you think back of the history of the camp, you go 30s, 40s, 50s, 60s, really central Timmins camp focused exploration models. So the understanding of, a Hollinger or a McIntyre or a Dome, and the geological side of that was evolved over that time frame. I think the big step change occurred in the late 90s, early 2000s, where you stepped outbound of the main core of the Timmins camp and you said, we're going to go west of this fault or that fault, or we're going to look with a different model at this camp. We're going to look at the pipestone. And so I think the evolution is that the main Timmins camp, as it's historically been defined, hasn't really evolved a whole bunch. There's obviously some different exploration techniques that can be used there. But the thesis is that, these outbound deep-seated structures, using a Great Bear analogy, are equally as prospective. And you can look at Lakeshore Gold, you can look at Trelawney, and you can look at Probe. Those are three discoveries that were outbound to the core camp, and they were all on what should be recognized as, major structural breaks, areas where there was some historic showings. Probe was a little different because it was granulate facies rock. So if there's something to be sort of consolidated here, it's they've looked at a little tweak to the exploration model. They've looked outbound from the main camp, and they've proven that the endowment is even more regional than you would have initially thought. You might have 70 million ounces of the core camp, but you step out and you say, it's 130 million ounces if you look at that at a 150 kilometer scale. And that change opens up tens of kilometers of structural break for material-sized deposits, things greater than 1 million ounces. So I think if you look at the history of the camp, it's evolving towards a little more outbound exploration philosophy and a broader level of endowment.
No, excellent. And thank you, Brian. That was well said. I mean, obviously there's things I'd like to threads I'd like to pick up, but I won't for the sake of time here. Comment from Nate saying, just getting good insight here from your companies, the capital spent on this web event as a resource speculator. So just some positive kudos for this event. But then maybe I'll give this one to you, Brock. Last question from Nermina, and this is going to be, Kyle, if you're listening, maybe you should be focusing a panel on AI and its impact on exploration. But Brock, if you can, 30 seconds, hold your breath and talk as fast as you can. Do you want to just discuss, are you using AI-based exploration? And even if not, what's your experience or what's your perspective on them?
Yeah, so I would say we were using a little bit of it, given the camp is mature, so there's a lot of data that AI can shift to and help, cipher through so much data, and it's almost too much for one mind to comprehend. So there is leverage for AI and to take and consolidate and deduce all that noise into something useful. But in terms of real, AI guiding drill bits and stuff like that, we haven't applied that yet.
Okay. Well, thank you, gentlemen. On that note, a little rushed here, but we'll try to end on the hour here. Brian Skanderbeg, GFG Resources, Jason Dankowski, Moneta Gold, and Brock Coltron of Onyx Gold. Thank you guys for a very illuminating conversation. Have a good day, guys.